Today on I'll Have You Know.
It's become a thing that I've latched onto and really enjoy, but it's not something I ever thought coming out of business school, will I be advising clients and holding their hand through good and bad times. And I thought I would just be a pencil pusher and moving around ones and zeros on a computer screen.
Jonathan McAdams had his eyes set on asset management. His MBA at Rice helped put him on that track. His career has led him to managing large institutional portfolios, to helping high net worth individuals. Today, we talk to him about what investor biases he sees repeated consistently, his analysis of the markets during the pandemic, and how managing a career as a senior portfolio manager works with 7 children at home. Joining us today on I'll Have You Know, Jonathan McAdams, Rice Business Class of 2001, speaking with us from Greenville, South Carolina. Jonathan, thank you for joining us.
My pleasure.
You're currently Senior Portfolio Manager for WCM Global Wealth. I know you're a former Aggie, also an OWL. Talk to us a little bit about your upbringing in Houston and how you decided to go to both of those universities.
Sure, yeah. I'm a native Houstonian, actually second generation native Houstonian. So it's home to me and still is, even though I haven't been there in a while. Coming out of high school, I went and grew up on the southwest side of town, Sugar Land area. And looked at a number of schools and really found a home at Texas A&M in terms of just the culture and the people and the alumni network, and it just really felt comfortable to me. Started out thinking I wanted to be a electrical engineer, and that was simply because that was what my dad was. But I enjoyed math and science, and so started that path. And about a semester into it, quickly realized I did not want to be an engineer for the rest of my life. So kind of gravitated to business and specifically finance. And so got my finance degree at A&M, and went back to work for a couple of years, about 4.5 years. Was a broker at Merrill Lynch, and then worked in retail banking for a number of years, both on the retail and then in the private bank. My goal coming out of A&M and even during those working years was I really wanted to get into asset management. Kept getting closer and closer, but really couldn't quite get all the way there. And so decided to go back and get my MBA to try to really help me get that stepping stone to break into the business. And so that's what led me to go back and get my MBA. And then even though I wanted to do asset management, I knew I didn't want to be in Boston or New York or one of the northeastern cities. I just really didn't want to live there if I didn't have to. So looked in the South, looked in the Midwest at schools. And Rice, while being in Houston, it was a little bit of a draw. Rice at the time, it was on the upswing. New dean, really trying to climb up the rankings. So it was a good value, a quality school. A lot of good things going for it. I really liked the teaching focus. They didn't just hire professors that did research and that's what they're known for, but they wanted actually good teachers, and so that was important to me as well. And as an investment guy, I kind of viewed it as I'm buying a stock that's on the upswing. Nevertheless, I felt like I was getting a good value, and that Rice was kind of on its way to making a name for itself, and I think that's borne out. But that's kind of how I ended up there.
Well, that was your first smart investment, number one, I think.
Right.
We've definitely seen the program grow in it's been almost 2 decades, I guess, since you were there, and they consistently seem to rank pretty high in the finance rankings for business schools. So that must make you feel good and proud, looking back on your decision to go there.
Yeah, and that was one of the things that drew me there was that they were, even at the time, they were strong on the finance side.
Since that time, you have quite a breadth of assets that you've worked with or in, from multi-billion-dollar funds, institutional, retail, even high net worth clients. Can you talk a little bit about just your progression? And do you have a favorite among those in who you're working with?
I've had the luxury, I think, of kind of seeing a lot of different sides of asset management in terms of pools of money that I'm on. I started out on the mutual fund side as a senior analyst. It was a large fund company, AIM, which was the largest fund company in Houston at the time. Started out with them. It was a $30 billion fund. I mean, we were moving around each trade was hundreds of millions of dollars. My first assignment there was they had me build a Microsoft model, and we went through it and figured out that we wanted to buy some more. And they're like, okay, buy I think it was like 25 basis points of the fund, about, it's $250 million trade, just sticker shock. So, I'm this kid out of school pushing around $250 million, and really enjoyed it. Great culture, great environment. Did my internship summer of 2000 and then graduated 2001. So the tech bubble was already in full force, collapsing. Fortunate that the portfolio manager that I was working for was leaving AIM, that I had worked for about 2 years, and was going to launch a hedge fund. So he asked me to come with him and help him do that. And so I got my taste of the hedge fund business. And that's what moved me to Nashville. And I've done high net worth. So the last, call it 10, 11 years, I've been, on the high net worth side slash hedge fund, where we've run some of that money side by side. And they're all different perspectives. I like the high net worth side or the retail side. When you're managing large pools of money for institutions, it becomes kind of nameless. Even though you're managing pension money and it's people's retirement, and you feel good about that, but it's still a little bit detached from the people who are actually investing. So I enjoy kind of on this side of the ball where I'm sitting across the table from somebody and talking about their investments and what they want to do with it, and it just puts a kind of a personal touch on it that's unique. So that's kind of where I've been the past couple of years, and I enjoy that aspect of it.
Yeah, definitely that personalization. Certainly been an interesting year when it comes to investments. Have you been surprised at all by the stock market's reaction to the pandemic and just the wild ride we've been on?
Yeah, I mean, I think in some ways yes, and in some ways no. When the whole thing started in kind of late February, early March, it was kind of this panic of this is something we've never dealt with before. The market had never dealt with before. We as a society, at least, in recent memory, never dealt with what happens when you shut down an economy. And so there was a lot of uncertainty, a lot of, what I call trading in a vacuum, meaning, no one had information. So with a lack of information and certainty, people pushed the sell button, so it became this, just get me out, created a lot of dislocation in the market, which 9 times out of 10, and probably 10 times out of 10 are always opportunities. So, we thought that it was a buying opportunity and not a selling opportunity. And, the market's come back. And I think on one level, you can look at it and go, well, how's the market, going to new highs when, we still have massive unemployment, businesses are going out of business, um, and all of that is true. But, I think when you kind of do a second level analysis and dig down, you see, okay, what enabled us at least to survive through this pandemic? It was technology, right? I mean, it was the ability to get on a internet call and work from home and push a couple of buttons on my app and get food delivered, and all of these things that technology enables allowed us to survive. And all of the companies that provided those tools did really well. So so when you look at what's kind of powered this market, it's been those companies, the Microsofts, the Amazons, the all of these companies that benefit from that. So and then here in the U.S., we have a disproportionate kind of weighting towards those types of companies, and so the U.S. market has obviously done way better than some international markets. Many international markets are still down on here, um, because they don't have those technology weightings that we have in the U.S. So, we kind of parse through it, and the reality is, when you think about the S&P 500, that's the 500 largest companies in the world are in the U.S. They're not the corner, spa and bar, and those companies aren't traded on a stock exchange. The ones that are traded on a stock exchange are the Walmarts and the Amazons that have the resources to be able to pivot and say, okay, people aren't coming in our stores. What do we do to get them, to make a sale? And so they increase their spending on digitization, all these things. And so they have the ability to pivot and spend the resources to, adapt. Whereas, a smaller mom and pop who, frankly, are still really struggling. Those aren't traded on a stock exchange, so that's where the real pain is. And so that's why you've seen the market kind of do well while there's still a lot of, kind of dislocation in the economy.
Definitely a crisis that has hit Main Street much more than Wall
Right,
Street.
right.
You've had experiences working with investors for a very long time. What kind of biases have you seen in your work, and is there a common thread that you see sort of happening or occurring again and again, regardless of the investor and their situation or position?
Yeah, there's definitely kind of these age-old biases that seem to persist. I was fortunate at Rice. We had a professor, David Eikenberry, who was our investments professor, and his field of research was researching these kind of anomalies that shouldn't happen in the market but do because of investor biases, right? We're all human beings. We all have these kind of tendencies that aren't all the time rational. We looked at a lot of those kind of irregularities in the market. Probably the ones we see the most. Um, the pain of loss is 2 to 3 times that of gains. How that manifests is, as soon as people start to lose money, it's imminently more painful to them than a similar gain on the other side. And so that's when people do irrational things because they want to relieve that pain, and the way to relieve that pain is to sell, and that's almost always the wrong thing to do. And so what you see is, you may say, okay, well, the XYZ market has done X% over the last 20 or 30 years, but the average investor does way less than that because of those biases, right? They sell when they're scared, and they buy when things are good, right? So they're selling low and buying high, and so their realized gains are much less than what they could have done just by sitting tight. When I'm sitting across the table from investors, is a big portion of my job is as a kind of a psychologist, psychiatrist, just
Yes.
keeping investors from doing the wrong thing. I can walk through the analytics of it all day, but when people are scared, you've got to find a way to give them perspective and calm them down. So that's probably the one we deal with the most, and it's it manifests. It's what you see in the market, right? It's there's an old adage in the market. The markets take the stairs up and the elevator down, and that's true. The average pullback in a market is usually over 6 to 9 months, a year, something like that. But it takes years and years to kind of climb up, and that's because of that. The once losses start to accelerate, people sell, and then they sell, and they get more scared, and they sell more, and so that also creates opportunity, right? As an active investor, you can take advantage if you realize what's going on. That's probably one of the biggest uh, kind of biases we see. I mean, there's 15 or 20 others that have been documented in different experiments, but that's probably one of the bigger ones. Anchoring is another big one where people anchor their expectations based on the recent past and not what's going to happen in the future. And so, and that kind of feeds into people when things are good, they're kind of extrapolating from the good times and say, well, it's been good the past couple of years, it's probably going to be good the next. And so, the market is a forward discounting mechanism. It's trying to figure out what's going to happen in the future. And so, and it works both ways. When the market's down, people are going to say it's never going to get better. And when the market, things are good, they're saying it's never going to be bad again. And so you use that to, kind of play against each other. But, those biases certainly exist.
So you talked a little bit about just the behavior of clients and the role that you have in that. Is that something that maybe surprised you that you didn't expect when you were in business school or planning a career in asset management? Just that the personal and the psychological aspect, or were you pretty much prepared and you knew that was going to be a big part of it?
I thought I'm just going to be an analyst behind a computer and crunch numbers and invest, assets and, be part of this big machine. As I, kind of progressed, and particularly as I, when I left the hedge fund and got into the RIA business or the advisory business, and started actually having to talk to clients and sit in front of them, explain things and walk them through. I found out there was a skill that I really didn't know I had. And a muscle I hadn't really exercised. But it turns out, I kind of had some knack for it, and so it's become a thing that I've kind of latched onto and really enjoy. But it's not something I ever thought coming out of business school will I be advising clients and doing holding their hand through good and bad times. And I thought I would just be a pencil pusher and moving around ones and zeros on a computer screen.
So I'm going to put you on the spot here. Generally speaking, what would some of your best investment advice be for 2021?
That's a good question. Stick to your plan. Have a long-term view. Don't try to guess every little wiggle in the market. We've had clients that, I've had clients that sold at the absolute bottom this year, and I've had clients who are wanting to get back in here. And so, um, I think stick to your plan. Particularly, if you're investing for a long-term goal, right? Most people are investing for retirement. And it could be 10 years, 20 years, 30 years away. You know, you don't need to be pulling up your portfolio every day or every week or every month, really. Um, have a long-term view. Don't try to trade the wiggles in the market. And I'm of the belief that having a good advisor, really helps. Like I said, because we all have these kind of ingrained, biases that sometimes are harmful as we invest. I think it's good to have somebody across the table who's been through some ups and downs and knows, when the markets are down, we should be buying. When the markets are up, we should be selling.
We know you put a lot of hours in at the office, but it's not all work for you. I know you mentioned you play golf, also play the drums. Is that something you still do actively?
Golf, not so much. So I'm kind of in a stage of life where my kids are so active that that's really become my activities. But there was a time I was playing a lot of golf, um, and drums not so much anymore either. I played when I was at when I was in Nashville. I played a little bit with my church there. So these days, it's just kind of what I do on the steering wheel, and not so much formally anymore. But
I could see drums being a good stress reliever for any job, I think, really.
probably do need to get my drum set up. Probably could have helped back in March, that's for sure.
And when you talk about your family, you're not kidding when you say they keep you busy. You have 7 children, ages 8 to 17, 2 sets of twins. Talk about just balancing that, and wow, your house has to be so active.
If you had asked me, kind of how you never know the path that life leads you, and if you had asked me how big do you want your family, I probably would have never said 7 kids, but here we are. So yeah, no, it's tough. I mean, we had 2 sets of twins uh, right off the bat. So our first kids were twins, and then our second set were twins about 3.5 years apart. So
Wow.
there was about when our first twins were 3.5 and our second twins were newborns. It's about 9 months that I really couldn't tell you what happened in the world. I really have no memory of at this point. Um, so yeah, it's definitely a handful and a full-time job, and my wife's a saint. Um, for all the things she does to keep the house running. But we're all in the age now where they're into their sports and activities, and it's traveling to baseball games and traveling to this or that. So it's just kind of that phase of life. But I wouldn't trade it for anything.
And I know the seventh addition to your family has been a very special experience. Can you share a little bit about how this has all come about?
Yeah, so we got involved with an organization that it's a what they call orphan hosting, and so what these organizations do, and there's several of them, they bring in orphans from various countries. The one we partnered with was they bring in from Ukraine and from Latvia, and essentially what they do is they bring them over to the U.S. They spend the Christmas break with you, or they spend the summer with you in your home, and you just love on them and show them what life is like in America. And there's no, it's not an adoption focus per se, um, although a lot of the kids do end up getting adopted. But we never went in and with the intent that we were going to adopt, with especially given we already had our hands full. So we did it a couple times. We hosted one girl over Christmas, and then the next year, well, we weren't going to do it. And then they called and said, "Hey, we've got a girl that last minute, would you take her?" And it was like, right up at the deadline and said, yeah, we'll take her. Well, then that girl fell through. And then, but we've got this other good girl. Would you take? And we said, sure, we'll do it. So we hosted her and over Christmas and just really fell in love. And, I think it's weird. You would think that my wife, would have been the one to say, we need to adopt, kind of right out the shoe. But it was really me. It was like kind of God put on my heart, hey, I think we're supposed to adopt her, but I didn't say anything at first because I wanted my wife to kind of come to that conclusion as well. And, and we both did. And so at the end of the hosting period, which is about a month, we asked her, and she was 15 at the time, about to turn 16. So we asked her if she would like to be in our family, and she said yes. Well, wasn't right away. She was going back. We asked her right before she was to head back to Ukraine. She wanted to fly back and talk with people in her life, and kind of think it over. That she finally told us that she wanted to, and so it was go from there. We had to kind of hurry up because the age limit on adoption is 16, and so we had to get all the paperwork filed and in. And but it was about a year process, and we ended up bringing her home. Fortuitously this year in February. So we're literally, it was mid-February when we brought her home. Right before everything shut down. Had we not, gotten under that window, she might still be there.
So she went from being an orphan to having 6 brothers and sisters and a family, within what, a year and a half's time?
Yeah, yeah, yeah. It's been a transition. There's ups and downs with that whole process for sure. But I think she's doing well and fitting in with the family, and so but yeah, it's particularly being that she was already a teenager, right? You already come in with kind of an idea of who you are and where you're headed and or might be headed, and so that all kind of turned upside down for her. And then obviously with the pandemic and you know online learning, and there's just been a lot of curveballs thrown at her this year, so it's been certainly a challenge, but she's risen to it, and it's been, I think, good for her and for us as a family.
That's a wonderful story and making such a difference. And I know there's so many Rice alums who have just such impressive careers and what they've done. But I also think it's important to take time to talk about what they're doing, outside of their job. And this is just a blessing to this girl, and just the way that you've been able to contribute through this program is just impossible to replace.
Everyone kind of gives back in their own way, and I would have never thought this would be one way we'd be doing that. But like you said, sometimes your plans aren't your own.
Right.
So we've definitely kind of rolled with it. But yeah, it's been a challenge, but it's been rewarding as well.
So with 7 kids, and I know obviously the age range would vary, but do you give them much advice even at this young age about, looking forward and planning for their future and making good financial decisions, even when you're first earning money?
Depending on the age, they all kind of know what I do. Some of them know more than others, depending on how old they are. um, but yeah, you try to instill those nuggets of saving early, and with having 6, now 7 kids, you see we've kind of got a little bit of almost every kind of personality, right? So we've got one son who you know as soon as money hits his pocket, it's in his hand and spending it somewhere. um, Versus, and then his twin just squirrels it away and saves it all the time. So we all kind of have these ingrained characteristics, personality traits, I guess. So I don't have to coach one as much on saving as I do the other. But yeah, we tried to do little things like, hey, instead of spending that, why don't we save it, and I'll match you, kind of like a matching program. I'll match you if you keep it saving it for a year, and try those little kind of things, and I'll walk them through the power of compounding. As they get older, the power of compounding. If you start now, you know,
Right, right.
it's much easier than starting 20 or 30 years from now. So So those little things, I would probably, given the hectic and craziness of the life, I probably don't do as much as I should, but I try to where I can.
Sounds like you could do a whole case study just with your family. You could have every personality and and the way they spend and are disciplined about it.
It really is. It's so funny just seeing, coming from the same two gene pools to be so
Right.
different um, in their personalities and how they save money. But it's reflective of how everyone is. And so we've got clients that don't spend a penny and have and then we've got clients who go through it like water. So.
As you look back on your rice business experience and, to where you are now, and you've had time to look back on it, what are just some reflections you have about the program and something that you would want to share for either a potential student, a current student, or maybe someone who wants to follow in your footsteps with your career path?
I think for me, you know, I had a very clear direction what I wanted to do when I went back to grad school. Not everyone does, but I would say, it was a good for me. It was a stepping stone to do, what I wanted to do, and so I would say, the things that drew me there, and the things that I think that current students are thinking about going back is, take advantage of that network that Rice offers. It's one of the strongest um, among schools, and do the little networking things that they teach you on day one. How to network and things to do, and but not everyone. We all hear it when we arrive on campus, but not everyone does it. And for instance, when I was interviewing for my internship at AIM, that was kind of in the spring, but in the fall, after kind of hearing the talk on how to network and how to use the alumni database, I said I called one of our alumni that worked at AIM, in that fall, and just said, hey, tell me about what you do. No expectation, just what does this job look like on a day-to-day basis? And she, very very nice and very friendly, and walked me through. And sure enough, when it came time to interview, we already had a rapport, and we'd already talked before. And turns out they offered me the job. And she kind of confided in me afterwards and said, you know what, you were the only one who reached out to me, of the people from Rice that interviewed. You were the only one that connected with me last fall and reached out and asked me, to network. And so it's those little things, that you never know. And so they just do those little things extra. I tell my kids that all the time. Don't just get the job done, but do it well. Do it with excellence. Because majority of people don't do the extra things. And if you can, you just that those eventually get noticed. And I would say keep learning. I think Rice was a great environment for me. There's some people who want to get investments or something and say, well, I just want to study finance. I don't want to learn all this other stuff. Um, but looking back, I'm glad I did. I had more of a well-rounded course offering, because when you invest, you got to know strategy, you got to know operations, you got to know marketing, when you're analyzing these companies. And so I'm glad I had that experience, and I'm glad I broadened my kind of knowledge base. And that doesn't stop when you leave Rice, I think, either. I think you got to always continue to be learning, and as the world changes, you got to change with it. And so those are going to be my nuggets of wisdom.
Jonathan McAdams, Rice Business Class of 2001. Thank you so much for joining us on I'll Have You Know.
My pleasure. I've enjoyed it.
This has been I'll Have You Know. Thanks for listening. You can find links and more information about our guests, hosts, and announcements on our website, business.rice.edu. Please subscribe to this podcast wherever you find your favorite podcasts, and leave us a comment while you're at it and let us know what you think. I'll Have You Know is a production of Rice Business and is sponsored by the Rice Business Alumni Board. The hosts of I'll Have You Know are myself, David Trugliever, and Christine Dobbyn.